Now let's look at the trade. I use these light blue arrow marks to identify where I entered the trade on the 5 minute time scale. And I have my break even line showing the difference in my spread, right? So the break even line is a line where if price stays above the break even, I can collect full profit on my credit spread. But take a look at RUT and what actually happened. So this trade happened on a Friday, right after a massive sell-off of RUT the day before. You can see by the gap down and then continuation of that day that we're in a nasty bear market in a way. Supply is taking over and demand is getting killed. So this is coming right after one of RUT's biggest sell-off days with heavy volume. So coming into the day, I'm already thinking we could potentially see a bounce, because my thinking is, how far are we going to continue to fall with these names? So around 11 a.m., I saw a strong volume spike and a price surge in IWM. We then we pushed to the new highs of the day, and this was my signal. This was the market phase shifting from bearish to bullish. I started to think about counter trend trading opportunities. This could be the start of a reversal or at least a pause in the downtrend. So I'll show you guys what I'm seeing with IWM, because RUT does not show volume. However, RUT and IWM both follow the small caps. So when we take a look at IWM, you can see how the price action looks very similar to RUT. However, I trade RUT as opposed to IWM because I get a little bit better spread with these contracts, and they're a bit more expensive. And the pre-market, it's already dropping, so that's interesting. However, if we take a look at the trade, you can see this bullish engulfing candlestick on the 5 minute with pretty good volume, as well as price coming back to take on new highs of the day with volume. So this is when I say you really have to take a look at the phase of the market. You have to understand if the market is trending up, trending down. Is it consolidating? Is it flat? Is it volatile? So we're definitely volatile, but my personal opinion is that we just reversed with this bullish reversal candlestick pattern of the bullish engulfing candle and then the volume spike increase. So my psychology has already changed. Let's go back to RUT. So the next part of the 5 Ps is, first we have the phase, next we have the pattern. When I look at the pattern, I like to look at the pattern on the 5 minute basis as well as the hourly chart. However, the 5 minute basis will show me exactly when I need to enter the trade. The pattern I saw forming was a classic V-shaped bounce. This was confirmed by a strong volume spike and a bullish engulfing candle at 10 a.m. A textbook reversal. Even though the previous day was extremely bearish and we opened near the lows, this kind of action told me to start looking for counter trend opportunities. So I waited for the first pullback, and once a bullish candlestick formed off that level, I got interested. I could have waited for a bull flag confirmation, which actually came later that day, but I had enough data to justify this trade. Let's take a look at price action, and then we'll get into the entry. So price action, for me, retracements are the most important part of price action. I use Fibonacci levels to identify ideal pullback zones, specifically between the 38 to 61 Fibonacci range level. In this case, we got a clean 50% retracement from the low and the high of the day, and this was my first check. So for example, if I take a look at the chart and go to the 5 minute right here, I entered around the 50% retracement throughout the whole day. And when I entered that trade, let's take out this Fibonacci level, and you can see my break even was just above the bullish engulfing candle, right? So when we take a look at price action and the pattern, I knew that, okay, I'm going to take a counter trend trade. And for my price action, I'm just waiting for this retracement, right? So The goal isn't to buy this breakout, right? This breakout is just confirming that that demand is back into the market. So never buy this first breakout, buy the pullback. And this pullback was a 50% pullback. And I decided to buy the first green candle and put my credit spread right below the bullish engulfing candle. Lastly, second to last in the 5P strategy is patience. Patience starts before setups even form. From 9:30 to 10, I sit on my hands and I watch the open. I look at how major indices react relative to the previous day, and I monitor the macro picture, the VIX, yields, technology, energy. I do all of this to get context in the market. So, for example, once I saw IWM starting to form the reversal pattern, I did not rush in. I waited for price action and my 3 confluences to happen. So I received the Fibonacci retracement. The second check was a bounce off the 9 and 20 EMA. And the third was a trendline break between the reversal. Lastly, I also had the bullish candle on the EMA, this bullish reversal candlestick pattern. So those were my confirmations to go in. When we talk about plan, I entered a put credit spread, which is a bullish pattern, which is a bullish trade. Essentially, you can see with the first arrow, I entered at around 11:43 a.m., putting my break even at around 1800. And you can see throughout the day, even though we declined almost to my break even level, once we had this push up, I was able to sell the credit. However, this trade gave a lot of lessons. This trade worked out, but it's a perfect example of why I love credit spreads. They're a forgiving strategy, and you can also manage the trades well. Even after my confirmations, price continued to retrace and actually cross my sold strike price. Right, as you guys see, price continued to come down. However, I stayed calm, managed the trade, and sure enough, the man came in and bounced back, and I was able to sell the trade for a 62% profit. I have held for full profit, sure, but for me, it's not worth the risk. The more profit you're in on a credit spread, the more risk you're exposed to. I'll rather exit early and compound consistently than hold and gamble. So again, the learning lesson with this trade is be a little bit more patient on the confirmations, but sometimes you just have to get into the trade and manage the trade while you're in it. Because this trade wasn't as smooth and it still pulled back, I was able to manage the trade and collect 62% on this trade.